when this happens, when suddenly there is, the West loses that pricing control, the whole pricing scheme that we've been held under, that it's a fractional reserve, digital derivative-based pricing scheme, where the trading of the futures contracts determines the actual physical price. That eventually unravels when there is no, like I said at the beginning, the banks, the bullion banks have to be able to flow physical metal into that derivative price. Otherwise, it's pointless. I mean, you might as well be trading baseball cards.
You're watching Silver News Daily. Subscribe for more.
Did you know silver could soar past dollar? For 8,000 yen, it's not just speculation. The market is teetering on the edge of an unprecedented supply collapse, and central banks are quietly stockpiling at record levels. It might sound wild, but what if I told you this isn't just another investment prediction? In today's video, we'll uncover the forces creating a perfect storm for silver prices to explode. So stay tuned, because missing this could mean missing out on one of the greatest financial opportunities of our time.
Oh, goodness gracious. A little. Andy, I tell you, first of all, thank you for the kind words and the friendship over the years. And it's a pleasure to have you as an advertiser on my site at tfmetallsreport.com. And I think the world of your company, Miles Franklin, I never hear anything but great reviews from anybody that goes from my site or from my Twitter feed to Miles Franklin. So thank you for your support. There are others too that carry the flag. I suppose Ed Steer, who I've never met, tries to kind of pick up where Ted left off too. There's all the commitment of traders data. Ted, God rest his soul, tried so hard to see through it all. It's like anything else in the precious metals market. They make it as deliberately opaque, about as clear as mud as they possibly can. And that's all part of that awakening, if you will. I was a stockbroker right out of college, but I was actually trading commodities. I had a brother-in-law that was a commodity broker. When I was in college, got the great soybean run of 1988. That's how old I am. And was hooked. I spent a lot of time, though, the rest of my career in financial services. And then around the time of the financial crisis in 2008 and 9, I, like a lot of other folks, started to kind of went, ooh, maybe this isn't exactly all that they've always told us it was. In the markets, Fed policy, the way I call it the media, political, financial complex, and now they all have their own beaks dipped in the trough and, kind of take care of each other. And I started learning about some of these things that aren't exactly what I thought they were. That then led me to gold and silver. And brothers, all you got to do is watch gold and silver for about a day or two, and you go, wait a second, there's something really seriously effed up about how these things trade.
Silver's market is facing a breaking point, and it all starts with the tightening grip on physical supply. You see, unlike other commodities, silver operates in two separate worlds: the paper market, where futures contracts are traded, and the physical market, where real silver changes hands. And here's the kicker. Right now, there's a massive disconnect between the two. In October alone, banks were scrambling to settle contracts as physical silver became harder to source. Premiums on spot silver prices skyrocketed, signaling that supply isn't just tight, it's critically low. Andrew Maguire, a renowned market insider, revealed that banks have been delaying settlement on futures contracts, using every trick in the book to suppress prices and avoid delivering actual silver. Why? Because they simply don't have enough metal to meet demand. And it's not just speculation. For 4 consecutive years, the silver market has been in a supply deficit. In 2024, the deficit exceeded 200 million ounces, driven by soaring industrial and investment demand. To put that into perspective, the world has consumed over 700 million more ounces of silver that it has produced in just the last 4 years. Even more alarming, the reserves held in the LBMA vaults, the world's largest silver storage, have been steadily draining. Over 60% of that silver is already allocated to ETF, leaving less than 300 million ounces unencumbered. At this rate, it's only a matter of time before supply collapses entirely. Now think about this. When demand keeps climbing, but supply is shrinking, prices don't just rise, they explode. And here's the question for you. If supply dries up, what happens to the futures market that relies on physical silver to validate its prices? Could we see the entire system unravel? Let us know your thoughts in the comments. And if this news is giving you some serious investment ideas, don't forget to subscribe for more insights like these. We're just getting started, and there's plenty more to uncover.
To some extent, they can. So they've proven over the 15 years I've been doing this that they can. They are ultimately, there's a job called the Bullion banks, the Bullion bankers that operate in London and New York. There's a management of price. There's the physical price where metal actually flows. And there's this paper price that actually wags that spot tail, if you will. That paper price, though, can only move so far because you actually have to be able to deliver physical metal at that price. So, which is kind of supportive of price. Now, I know we've been getting the crud kicked out of us for the last week. But when people say, well, gold's going back under 2,000, well, actually, I guess if all central bank demand and everything else dries up, okay, then maybe they can bring it down that far. But the problem for these bankers is they've got to flow physical metal into this price that's derived by the trading of futures contracts, which puts them in a bind from time to time. We saw this just last week, Andy. It's crazy. We're recording this here on the 19th. You just go back to the 11th or 12th last week. Some very unusual occurrences were going on, primarily rooted on the COMEX in New York, where the current, or what had been what we call the front month, the December contracts, are off the board and allegedly making what we can delivery. And the price of those front month contracts started to blow out higher versus the spot price. Well, there's no way that should happen for a number of reasons. But it did for both gold and silver. And it was evidence of some kind of supply issue. Well, lo and behold, a week later, that supply issue seems to be fixed as silver's down 12% in 5 days. What can ultimately break that stranglehold that these banks have, really, honestly is just physical supply and demand. Get to the point where this system, this trading system, this derivative-based pricing scheme can no longer flow metal at any price because there's just not enough metal to be found. Obviously, that's not the case yet. But that's why it's so important. We've been stressing this for 15 years. If you want to find free and fair price, something that's actually where price is derived through the trading of physical or something close to it rather than these phony baloney futures contracts, then all we can do is continue to take metal off of the system, offload it, buy it from Miles Franklin, take delivery, or you guys can store it, get it out of the bankers' hands, and squeeze them from a physical standpoint. We're not there yet. 4 years of supply deficits in silver, 200 million ounces a year, hasn't done it yet.
Now let's talk about central banks, the quiet but powerful players in this silver surge. While most of the spotlight has been on their record gold purchases, a seismic shift is happening behind the scenes, and silver could be the next big move. Central banks, particularly in Brics nations like China, India, and Russia, are leading a global dedollarization effort. They're ditching U.S. dollar reserves and replacing them with tangible assets like gold and possibly silver. This year alone, gold demand from central banks hit its highest levels in history, and while silver hasn't yet reached the same spotlight, it's becoming increasingly clear that it could follow. Here's why. Silver is not just a precious metal, it's an indispensable industrial asset. BRICS nations are spearheading green energy initiatives and massive infrastructure projects, both of which rely heavily on silver for solar panels, electronics, and advanced technologies. To sustain these efforts, they need more than just gold, they need silver too. And the BRICS influence goes far beyond industrial demand. These nations are reshaping the global financial system. At the BRICS Kazan Summit, they announced plans for a gold-backed currency to rival the US dollar. But here's the twist. This shift could indirectly elevate silver's status. With gold prices soaring, silver becomes the more affordable alternative for nations, seeking to bolster reserves and hedge against the crumbling dollar. Now consider this. If central banks quietly start stockpiling silver just as they had done with gold, the already strained supply could face an even bigger crunch. The question is, are we already seeing the early signs of this? And if so, how will this impact silver prices in the coming months? Drop your thoughts below. Are central banks already positioning silver for a historic run? And if you haven't subscribed yet, make sure you've hit that button to stay informed as we uncover more about this game-changing trend.
Putin and his cronies have figured it out. At this point, though, they have to sit back and go, wow, they're willing to let me cobble together 2,600 of their American dollars and they'll give me an ounce of gold for that. Okay. We'll take them up on it as long as we can. And so, again, that demand, that shift, all they're doing is on a much larger scale what you and I and most people watching are doing, which is we're taking our dollar reserves, our savings from our hard work, and we're converting some of them into physical metal. Well, that's what these countries are doing at the sovereign level. They're taking their dollar reserves from all their export business and their, economic production, and they're converting them into gold and even now in some cases silver. That demand has played a huge role. I don't think there's any doubt about it, it's particularly in gold this year. Because again, we're seeing now the third year in a row of record central bank gold demand. And price has rallied this year. What are we this morning? 2,600 or something like that. We started the year closer to 2,000. So we're still up, a significant percentage, 25% year to date, while interest rates in the U.S. have been rising, while the dollar index has been rising. Typically, that's, an environment where gold prices suffer. Even if you want to compute real interest rates based off of, current conditions and that sort of thing and inflation expectations, gold should have been heading down this year, but instead it's been consistently moving higher, at least until the last 6 weeks or so. So yes, I think the central bank demand is having a major impact. Do they understand? They have to understand what they're doing. I can't imagine. I'll give you one more thing. You talked about the BRICS grain exchange. I remember I mentioned this trading grains with my brother-in-law back in the 80s. And the stories back then were that, that all of a sudden you get this bombing run on the Chicago Board of Trade, and all of a sudden wheat futures would collapse over a period of a couple of weeks. And everybody like, what the heck? And then, a couple of weeks after that, here comes some massive Chinese order for America.
Let's dive into the BRICS nations and their game-changing moves that could redefine the global financial system and silver's role in it. For decades, the U.S. dollar has dominated global trade, but that dominance is crumbling as BRICS countries, Brazil, Russia, India, China, and South Africa, join forces to create an alternative financial system. The recent BRICS Kazan Summit highlighted one of the boldest proposals yet, a gold-backed currency designed to challenge the dollar's supremacy. But this isn't just about gold. It's about shifting the entire balance of power in the global economy. BRICS nations collectively account for 85% of global commodities trade, and they're actively working to price those commodities and alternatives to the dollar. And here's where silver comes into play. As these nations de-dollarize and build a gold-backed financial framework, silver could serve as a critical supporting asset. Why? Because silver has historically mirrored gold's monetary value, but is far more accessible. With gold prices climbing to near record highs, silver becomes the logical alternative for nations seeking to accumulate reserves without draining their budgets. The implications of this shift are profound. For example, Brics countries are investing heavily in blockchain and digital currencies to bypass the US-led SWIFT system. Saudi Arabia, now a full participant in Brics digital currency platforms, is pricing commodities in gold, and it's only a matter of time before silver becomes part of this strategy. Think about this. If Brics successfully implement their gold-backed currency, it could spark a domino effect. Other nations may adopt similar strategies, putting even more strain on the global silver supply as silver's monetary status is reestablished alongside gold. The question is, will Brics nations be the ones to finally elevate silver from an industrial commodity back to a key financial asset? And if they succeed, what will that mean for silver prices and global markets? Share your thoughts below. Are we witnessing the start of a global financial revolution? And if you're finding value in this discussion, subscribe to our channel now to stay ahead of these groundbreaking developments. We've got even more to uncover in the steps ahead.
The UK, where they don't mine any, right? So it's just coming out of LBMA reserves. And then the import into Switzerland, and then the export out of Switzerland, and then the import into Hong Kong, into China. And again, this has been going on for over a decade. And what's happening is the standard is shifting. They're taking those 400-ounce bars and recasting them into kilo bars, the 4.9 quality kilo bars. This has been going on, like I said, a long time, and it will continue. It's just a steady drain. And again, people think, well, why? And again, and what is the significance eventually? When this happens, when suddenly there is, the West loses that pricing control, the whole pricing scheme that we've been held under, it's a fractional reserve, digital derivative-based pricing scheme where the trading of the futures contracts determines the actual physical price. That eventually unravels when there is no, like I said at the beginning, the banks, those bullion banks have to be able to flow physical metal into that derivative price. Otherwise, it's pointless. I mean, you might as well be trading baseball cards. And so that's why that physical metal has to be there. We don't know how much is left. We don't know how, Ronan Manley is a guy that has done exhaustive research about how much actual metal there is in the vaults of the Bank of England and at the LBMA. Metal that's not actually owned by the ETFs or owned by the Bank of England or whatever. That's actually unencumbered, clear title stuff. And nobody knows. But this steady drip, this steady extraction is clearly continuing to put pressure.
Now, let's shift gears and talk about silver's critical role in powering the industries of the future, because this isn't just a monetary metal. It's the backbone of innovation. Silver is a hybrid metal, half precious, half industrial, and its demand from industries is skyrocketing. The green energy revolution is a major driver, with solar panels leading the charge. Did you know that silver is a crucial component in photovoltaic cells, the heart of solar technology? In 2023 alone, the solar industry consumed over 6,000 metric tons of silver, and with global renewable energy targets accelerating, this demand is projected to grow by 16% annually through 2027. But that's not all. Silver is also indispensable in electronics, medical devices, and the growing electric vehicle market. Its unmatched conductivity makes it essential for everything from circuit boards to high-performance batteries. As artificial intelligence and smart technologies expand, silver's role in powering these systems will only deepen. What's critical here is that this industrial demand is happening alongside silver's resurgence as a monetary metal. Unlike gold, which is mostly hoarded by central banks, silver has a unique dual demand. Investors buy it for its value, while industries depend on it to keep the modern world running. And here's where it gets interesting. With industrial and investment demand both climbing, the world is now consuming more silver than it mines. The result? A supply deficit that's only getting worse. Think about this. How long can this imbalance last? What happens when industries can no longer secure the silver they need at current prices? And as investors wake up to this reality, will they start rushing to secure their share before it's too late? Drop your predictions in the comments. And don't forget to hit the subscribe button so you don't miss the next step, where we'll explore silver's competition with gold and Bitcoin, and why silver might just come out on top.
Now, this is not just a straight supply-demand thing anymore. Now we're going to have synthetic Bitcoin and all that kind of stuff. And so I sold a little bit of what I bought back then. Oh well. No, but I still, look, I see it as it's another alternative to the dollar. It is a more speculative investment. I don't know what the future is going to hold, for it. It's impossible to say, but I do know what the future is going to hold for gold because we've been doing this for 5,000 years. I think it's a companion trade. It's something in addition to my gold. It's not a big position that I have. I could, from a fiat making standpoint, I wish I could go back 10 years ago and buy some when it was $60 a Bitcoin or something. But in terms of whether it'll work as this sovereign reserve, like Trump is talking about, a U.S. Bitcoin reserve or something, there's this folly that somehow the U.S. is going to buy enough Bitcoin that the Bitcoin's going to go up in price, and then the Bitcoin can be sold to cover the national debt. I mean, come on. This doesn't work that way. There might be enough demand at the sovereign level to continue to promote the price. Again, though, for my purposes, I don't want to just speculate on that. I mean, it's a fun little trade vehicle. I'm going to rely more upon history and knowing how this has played out in the past. And like I said, 5,000 years of monetary history where the currency gets debased to the point where it becomes essentially worthless. You need a new structure. You need a new currency to get trade started again, to have some confidence in using it, and that the thing will retain its value. It's partially backed or fully redeemable into gold. It's just how it's always been. It's how this current system started 80 years ago. You could convert 35 US dollars into an ounce of gold, and that gave everybody the confidence to use the dollar in rebuilding after World War II. The US had 25,000 tons of gold back then, and that's why we have this exorbitant privilege of the reserve currency in the first place. But that's not going to go on forever. Whoever has the gold next, it's simplistic to say we'll make the rules, but that is eventually where this heads. So, like I said, do I own Bitcoin? Yes. Do I think it is a speculative asset? Yes. Is it a complement to my gold? Yeah. But it certainly is not. I don't see it in any circumstance going forward where it is a
silver, gold, and Bitcoin. Free assets often compared, but each with its unique advantages. Today, we're diving into why silver might just edge out the competition as the most compelling choice in the current economic climate. First, let's talk gold. It's the heavyweight champion of monetary metals and has been for 5,000 years. Central banks are hoarding it, and its role as a safe haven asset is undisputed. But here's the challenge. Gold is expensive. At over $2,600 an ounce, it's pricing up many individual investors and even some institutional buyers. This is where silver comes in as the poor man's gold, offering similar benefits at a fraction of the cost. Now, what about Bitcoin? Some argue it's the digital equivalent of gold, an alternative to fiat currencies that's decentralized and finite. But Bitcoin comes with risks. Its 15-year history is a far cry from the millennia-long track record of precious metals. And while it's shown impressive returns, it's also plagued by extreme volatility. Central banks are skeptical about adopting Bitcoin as a reserve asset, which limits its ability to truly rival gold or silver in times of crisis. Here's where silver stands out. Unlike Bitcoin, silver is tangible. You can hold it, store it, and use it. And unlike gold, silver isn't just a store of value. It's a critical industrial metal. Its dual purpose makes it less dependent on speculative demand and more resilient in a volatile market. But what truly sets silver apart is its accessibility. With prices still hovering around $30 an ounce, It's an entry point for everyday investors who want to hedge against inflation and currency devaluation. And as the industrial demand for silver continues to grow, its price potential becomes even more attractive. So here's the question. If you had to choose one asset to protect your wealth in today's uncertain economy, would it be silver, gold, or Bitcoin? Which of these assets has the most untapped potential for explosive growth? Let us know in the comments. And if you're enjoying this breakdown, subscribe now. We've got more to cover, including how market manipulation is holding silver back and why that could soon change.
That's something like that. Again, it's a perfect example of the greater fool theory, that we learned 30 or 40 years ago in college. You're buying something in the hope that a greater fool will buy it from you at a higher price and you'll be able to sell it to them. And that's really all those things are. But I don't, it's fun to make fun of, but I don't want to make it into any bigger deal than it is. It might as well just be a penny stock that was trading at 20 cents that went to $1, like what happened with Wall Street bets and, that kind of stuff. Bigger picture, it's symptomatic of a number of things as it relates to this conversation. It just shows you how, we're not even on the radar, Andy, you and I, whether it's trading precious metals or the mining shares, we're not even, you can't even say we're an afterthought. When there's digital tokens, if you look down the list, starting at Bitcoin and go to Ethereum and Tether and you go down the list, you get down to like the 13th and 14th biggest market cap. I don't like using that term, but if you do, things I've never heard of, I have no idea, they have any viability at all, but they have a market cap of like $15 billion. Well, the entire GDX ETF has a market cap of about $13 billion.
Crazy. If you could buy every mining share on the planet.
Yeah. There was a day last week, and this is again, Fartcoin's a symptom of all this. The big 8, there used to be the Mag 7, now it's the big 8. They include Broadcom, I think. All right, so there was a day last week, Monday, maybe last week, where just those 8 stocks alone added over $400 billion of market cap. $400 billion in a day. And again, the GDX has a 13 to maybe $14 billion market cap. We're not even on the radar at this point. And that will change. Everything cycles, but man, for now, between Bitcoin and Fartcoin and everything else, it's all part of the challenge.
Let's address the elephant in the room, manipulation. Silver's price isn't just a reflection of supply and demand. It's often suppressed by powerful institutions, and understanding this could be the key to predicting when silver will finally break free. For decades, banks and trading houses have controlled silver prices through the futures market, where contracts are traded rather than actual silver. This paper-based system allows prices to be artificially influenced without requiring physical delivery of the metal. For instance, banks frequently short-sell silver futures, flooding the market with paper contracts to drive prices down. And while this benefits them in the short term, it's creating cracks in the system. Here's the catch. The futures market relies on actual physical silver to back up those contracts. If banks can't deliver physical silver when it's demanded, the entire pricing structure falls apart. And this is already happening. We've seen delays in rising premiums for silver deliveries, clear signs that physical supply is drying up. The disconnect between the paper and physical markets is growing. In October, the premiums for physical silver spiked as speculators betting against the metal suffered massive losses. Banks scrambled to suppress prices again, but with a 4-year global supply deficit and industrial demand surging, this manipulation is becoming harder to maintain. And it's not just the institutions taking notice. Investors around the world are waking up to this manipulation and pulling silver out of the system by taking physical delivery. This puts even more pressure on the market. If this trend continues, and all signs indicate it will, the ability of banks to control prices could finally unravel. So here's the big question. How much longer can they keep this game up? And when the system breaks, what happens to silver prices? Share your thoughts in the comments. If you're enjoying this deep dive, hit subscribe and stick around. We're moving closer to the apex, where we'll break down how silver could skyrocket and why the financial reset might be closer than we think.
It will happen. What frustrates me is one, lack of patience, right? Everybody wants something right now. It didn't happen this week, then, or if I don't make 20% in a day, nobody has any patience. So that's always very frustrating. But what will happen is not this binary flip. People think, well, there's going to be a Brics currency, there's going to be an alternative to the dollar and all this stuff. And that there's somehow this binary choice where one day it's a dollar and then, all of a sudden the dollar just goes away. And then we have this. It's not going to work that way. I mentioned earlier, you back your currency, whatever the new one is, with gold or with a basket of gold with other things, anything to give it some heft, right? Some gravitas, like they used to say about George Bush. Remember that back in the day? You have to, if you're going to, let's say sometime in the next however many years, an alternative is put out there to rival the dollar, or at least to allow these countries that see their foreign policy as potentially adversarial to the U.S. and the West, and so they don't want to get cut off the U.S. system like what we did to Russia, and so well, we better come up with our own system here. Well, to encourage use of that system, you can't just say, so we're going to use the yuan. And, well, no, let's sit back and go, I don't know about that. But if you come up with something that's like a basket of everybody else's currency and half gold, or I'm just positing whatever, but you anchor it with something so that you have confidence that the thing will retain some value, so that if you trade from one country to another and you use this as the conduit, you end up with a reserve of these things. You don't want them just, getting cut in half in their value in 6 months, like an emerging market currency. So you anchor it with gold, and that gives it some, like I said, some heft to allow, okay, you know what, we will use that a little bit. And then that becomes kind of a we're already in a death by 1,000 cuts. That just increases the pace of cuts into the US dollar's credibility. And what that ultimately does is just simply supply and demand, because we're in this period where the supply of dollars is growing almost exponentially at this point. Now, I'm not talking about M2 and all that kind of stuff. I'm just talking about the U.S. debt and the amount of dollars, because every dollar is debt, and the debt is increasing so quickly now, and the amount of dollars needed to service that debt is going up. They're just going up like this together. So we have the supply of dollars that's increasing, and if you can begin to cut into the demand side of that by these alternative currencies, then again, that's Econ 101. Increasing supply with falling demand makes a lower value, a lower price. And that's, again, ultimately, that's where all this is headed, Andy. It's, again, people get so frustrated. They want it. I want this to happen now. There's a Brics meeting back in October. Oh, there's not ever going to be a big, I'm going to reach over and turn off a light. It doesn't work that way, but it's going to be this gradual, continual move away from the dollar share. Again, that's less demand for dollars at the same time supply is increasing. I know you said one more question, but I thought, what one thing do I want to make sure people know from listening to this? So I'm going to tuck this in here now, Andy, if that's okay, as my monologue continues. The U.S. government, the Treasury Department, puts out what they very creatively call the monthly Treasury statement every month. They make the big bucks for this stuff, Andy. Marketing geniuses. Anyway, it's the 8th or the 9th business day of the month. It comes out at 2:00 Eastern. And it's a summary of all of the spending and all of the tax receipts and income, if you will, that comes in to the government over the previous calendar month. Okay, so again, we have this much coming in, we have this much going out. That's your deficit on a monthly basis. The deficit for the most recent month that we got was November. The deficit for November alone, Andy, $367 billion for just the month of November. The new fiscal year, the U.S. government runs a fiscal year October 1 to September 30th. So new fiscal year just started on October the 1st. We ran a 200 some odd billion dollar deficit. In October, we're up to $624 billion of deficit spending in just the first 2 months, the first 61 days of the new fiscal year. That is not sustainable. It's certainly not sustainable with the Fed talking about hiking rates and higher for longer and all this other crapola that we got fed yesterday and the metals got crushed. That alone right there is why the metals are going to continue to go higher. That requires constant devaluation of the currency, paying off yesterday's debt with a cheaper currency tomorrow is how the Keynesian economists have always done it, and they're going to do it again. And it is that endless exponential growth now of the debt that will always keep a bid under the precious metal and makes gold more valuable.
Now, let's explore the possibility of a global financial reset, a seismic shift in the monetary system that could radically change the role of precious metals like silver. The concept of a financial reset isn't a fringe theory. It's increasingly discussed among global economists and policymakers. The U.S. national debt is approaching $36 trillion, with deficits growing by hundreds of billions each month. This unsustainable debt, coupled with the weaponization of the dollar in geopolitical conflicts, is eroding trust in the global financial system. This is where silver comes in. In times of financial instability, hard assets like gold and silver have historically been revalued to restore confidence in monetary systems. For example, analysts like Andy Schechtman and Craig Hemke argue that a currency reset could involve pegging new digital currencies to gold and potentially silver. Central banks, particularly in Brics nations, are already positioning themselves for this transition by accumulating record levels of gold. But here's the twist. If gold becomes the backbone of a new financial system, silver could benefit even more. As gold prices rise, silver becomes a more affordable alternative for individuals and smaller nations looking to hedge against inflation and currency devaluation. And as silver is reintroduced as a monetary metal, its price could rise dramatically to reflect its true value in the new system. Think about the potential. Revaluation of silver would not only impact its price, but could also influence its availability as industrial and monetary demand collide. With global reserves dwindling and supply deficits growing, could silver become the most sought-after asset in a post-reset world? What do you think? Could we see a financial system where silver plays a central role? And how would that impact you as an investor or someone watching the global economy unfold? Leave your thoughts in the comments, and if you're finding value in these discussions, subscribe now to stay ahead of the curve. Up next, we'll dive into the apex, where we connect all the dots and explain exactly how silver's perfect storm could lead to historic price surges.
It is. I can't even begin to express. I know you feel this way. Probably everybody watching this feels this way. It's extraordinarily frustrating to have held silver as long. Now, fortunately, I've just continued to buy it over the course of the 15 years that I've been running the site since I first bought my first ounce. So my cost basis is like under 20 because, from 13 through 2018, the price was under 20. So I got that going for me. But it's extraordinarily frustrating. Like I said, we just saw a week ago, it seemed like, wow, there's some real physical problems for the banks. These spreads between spot and futures contracts as wide as $1. And then what happens? You get this smash and we're down $4 in 5 days, 12%. Silver and sugar are the only two commodities that have not yet made an all-time high over the past couple of years. I mean, everything else has. So
this goes back to 1980 too, with sugar
going
as
back
well.
versus their previous all-time highs. Yeah, everything else on the full board has made new all-time highs except silver and sugar. So there's all these things that just drive you bananas. The structure of the market, this fractional reserve system, is what allows the price to stay down. These bullion banks have extraordinarily large. It's the most shorted commodity on the board, again, going back to Nick Laird's charts at Gold Charts or Us, the amount of mine supply that is short by these banks that make the market, it dwarfs every other commodity. You can go through those commitment of traders reports that I was talking about earlier. All the other there you go. All the other, should somebody want to go through they're all on the CFTC site. You go through equity futures and bond futures and Forex and grains and softs and cattle and all that, whatever. And you find no discernible pattern of commercials versus speculators, and one side always long and one side always short. It's just all over the place until you get to gold and silver. And you have these massive short positions by the commercials and the swap dealing banks. And then it's always up against the speculators. It always is. The banks are always short and the speculators are always long. You won't find that anyplace else. And all of this is why, again, we could go on and on about the CFTC and everything that I've learned over the last 15 years in dealing with them and the people that I know and their dealings with them. At the end of the day, like the debt, it's a pricing scheme that is unsustainable. Okay. The amount of silver being used now, this is going to be the fourth year in a row of at least a 200 million ounce supply deficit. Now, how many ounces are already above ground? If you count grandma's candlesticks, and platters and tea set, I don't know, 2 billion ounces, 3 billion ounces, if, you think of all that stuff. So maybe we got a ways to go. But however, with the electric trade, the EVs and electrification and green and all this kind of stuff, the demand for silver and copper as well in the years to come is far going to exceed supply. And eventually the system, like the debt-based monetary system, just kind of collapses on itself. And it's almost the analogy I like to use, and again, here I have too much coffee in it. It's still.
Now let's focus on the forecasts that are turning heads. Expert predictions that suggest silver could rise to levels we've never seen before. The numbers don't lie. We're entering a period of extreme scarcity for silver. With the global supply deficit exceeding 200 million ounces in 2024 and industrial demand showing no signs of slowing, some analysts believe this imbalance could push silver prices well past $100, and it's just the start. But the story doesn't end there. Central banks are stockpiling gold at record levels, and many experts argue that silver could soon follow. If central banks begin accumulating silver to hedge against inflation and dedollarization, the supply crunch could deepen even further. Analysts like Craig Hemke and Andy Schechtman warn that silver's current price doesn't reflect its true value, and when the market catches up, prices could hit $300, $500, or even higher, and then there's the possibility of a financial reset. If currencies are re-anchored to gold, and potentially silver, we could see an overnight revaluation of precious metals. Some forecasts suggest silver could reach $3,000 or more as nations scramble to secure reserves. The scarcity of physical silver, combined with its growing industrial importance, could make it one of the most sought-after assets in the world. So, what does this mean for you? It means the silver market is on the verge of a historic transformation. The convergence of supply deficits, surging demand, and global financial shifts is creating a once-in-a-lifetime opportunity. But here's the real question. Are these predictions too bold, or are they just the start of silver's rise to its true potential? Could we be looking at a future where silver isn't just an industrial metal, but one of the most valuable assets in global finance? Let us know what you think in the comments below. And if you're finding value in this breakdown, subscribe to stay ahead of the curve. We're not done yet. In the next step, we'll tie all of this together and explain exactly why silver is perfectly positioned for this historic price surge.
Early in the morning where I am and afternoon where you are is like, and this is timely because everybody's watching It's a Wonderful Life this time of year, and the system for pricing silver and gold, for that matter, is a fractional reserve system, not unlike the Bailey Brothers building and loan. And your money's at Ed's house. And, that scene where George is supposed to be going on his honeymoon, but that Uncle Billy gave out all the money and now everybody wants their money. It's like you can't go to your local bank and take out $2 million. They don't have it in the safe. It's, they have reserve requirements. It's a fractional reserve system. The COMEX is a fractional reserve system. And so even as the supply draws down, they keep the system running, but the leverage, the tightening of that leverage, it's just getting tighter and tighter against them. Okay. And the leverage is going higher and higher. And so eventually it's going to run out. And that's what makes silver such an intriguing investment, even just from a capital appreciation standpoint, because we don't know how many ounces are free and clear of title. I know I can call up Miles Franklin today and you guys will send me some silver, right? But when it gets to the point where China is demanding 500 million ounces in a year, can they get it? You showed that chart of the London vaults only have 3-4 million ounces in them. Well, okay, what happens when it's gone? What's the price? I don't know. So it's been extraordinarily frustrating to hold it. But even here at $29 or $30 or whatever, I think the capital appreciation long term is significant. If I might add one last thing, Andy, too. This also goes for gold, though. Even in this system, gold has appreciated from $35 an ounce 50 odd years ago to $2,500 an ounce, even within this system. A London bar, 400 ounce London bar, in 1971, you could buy one of those for $14,000 US. It now takes about 1.1 million US dollars. The bar hasn't changed. Bar's the same bar. Okay. So that's how the gold, and then eventually the silver too, protects your purchasing power. And that's why everybody has to have some. And, if the banks are going to beat back the price and give you a gift that China's happy to take, that Russia's happy to take, that India's happy to take, you should be happy to take it as well. Don't be sore by.
Now, we've reached the moment you've been waiting for, the apex. Let's connect the dots and uncover exactly how silver could skyrocket in the face of this perfect storm of collapsing supply, surging demand, and global financial shifts. First, let's revisit the fundamentals. Silver has been in a supply deficit for 4 consecutive years, with industrial demand outpacing mining and recycling. The solar, tech, and electric vehicle industries are consuming silver at record rates, while investor interest grows amid fears of inflation and economic instability. This dual demand is unlike anything we've seen before, and it's putting unprecedented pressure on silver reserves. Then there's the role of central banks. As Brics nations continue to dedollarize and stockpile gold, silver's position as an affordable alternative becomes increasingly critical. If these nations start accumulating silver in addition to gold to hedge against the dollar's decline, the already strained physical market could implode. And remember, with gold-backed currencies on the horizon, silver could reclaim its monetary status, driving prices higher than anyone expects. Let's not forget the impact of market manipulation. The paper market, long used to suppress silver prices, is cracking under the strain of physical shortages. Banks delaying settlements and rising premiums on physical deliveries are signs that the system is nearing its breaking point. When this happens, when physical demand overwhelms the ability to suppress prices, we could see silver's true value unleashed. Finally, there's the possibility of a financial reset. As trust in fiat currencies erodes, governments may have no choice but to re-anchor their systems to tangible assets like gold and silver. Analysts suggest that in such a scenario, silver could see a monumental revaluation, with prices far exceeding the current $30 range. Some even predict silver climbing to $300, $500 or higher as its scarcity becomes undeniable and its dual role as a monetary and industrial metal takes center stage. So what does this all mean for you? It means that the opportunity to invest in silver before its price skyrockets might not last much longer. We're talking about a convergence of forces that could make silver one of the most valuable assets in the world. But as always, this isn't financial advice, just a roadmap of what's possible based on the facts. So, do you think silver could really hit $3,000? Are we witnessing the beginning of a new era for this underestimated metal? Share your thoughts in the comments below, and don't forget to subscribe to our channel for more insights into silver, gold, and the shifting global economy. The storm is here. Are you ready?